Welcome back. Wall Street's keeping a somewhat watchful eye on Washington as this government shutdown approaches. And here's why. New analysis from Ernst & Young Parthenon finds protracted shutdown could cost the U.S. economy about $7 billion per week. MoneyWatch correspondent Kelly O'Grady joins me now. Kelly, I don't want to confuse people. We have a $30.5 trillion U.S. economy. So if you took $7 billion a week and multiplied that by every week of the year, you get $364 billion. That's not going to crater the economy, but there's a multiplier effect in there. And more importantly, there's data that comes from the federal government that might be slowed or absent entirely, and I think that's what Wall Street's paying attention to.
That's right. I mean, look, Major, the market's closed up today. And of course, we don't have the government shutdown. There could still be an 11th hour deal, right? And we'll sort of see how the markets react tomorrow. But I will note that normally, even when you see some oscillations in the market when a government shutdown happens, it goes away pretty quickly. We're not dealing with a debt ceiling and the question of whether the government is going to default. That's really where you more see investors have a visceral reaction. But I'm glad you brought up this economic data piece, because we have a jobs report coming out on Friday. I am ready to go report on it for you. But if the government shuts down, that's going to be delayed. Now, that's important because it's a key piece of information that the Federal Reserve is going to use at the end of October when it meets next to decide whether it's going to cut interest rates. And I've spoken to a number of analysts, and they said, well, you know what, if the Fed doesn't have that data, and if it doesn't have the inflation report that comes out next or in a week or so, they might just say, hey, we're going to be a little cautious. We're not going to do anything with rates, or they might even delay that meeting. And so you talk about that cascading effect, that can impact you at home when it comes to small business loans, mortgage rates. So that's really more the thing that investors, I agree with you, are looking at here.
And Kelly, we've talked about this before, but investors talk about and business leaders talk about the uncertainty tax, meaning things are uncertain, and that makes people hesitant in terms of investing, planning for future initiatives. This would fall into that.
It definitely would. You have a lot of uncertainty, the labor market, interest rates, tariffs, a government shutdown, and how long that's going to last. Remember, under President Trump's first term, it lasted over a month. That does add to the element of, are you going to hire? Are you going to fire? Are you going to invest more in that? Now, we're talking mostly about, federal government, but that does cascade down, because if a federal worker isn't getting paid, even if they're going to get back pay, they're probably going to scrunch the purse strings a little bit in the meantime. So those things do trickle down to the economy.
Federal workers, and importantly, don't forget about these federal contractors. They outnumber the federal workforce, and they will probably not get paid either. Kelly O'Grady, always a pleasure. Thank you so very much.